You have to understand how this system works. See, the shareholders, the owners of a company, they're the ones that make the shots. And the executives, your boss, the CEOs, the C-level executives, they're the ones that are trying to please their boss. Who is their boss? Because yes, your CEO has a boss. Their boss is the shareholder. So the CEOs and the C-level executives have a duty not to please their employees. It's not to please their customers. It's to please the shareholders. How do you do that? By making the company more valuable, by increasing the profits, by increasing the market valuation of the company. How do you do that? Well, you got to get more customers. You got to make the customers happy, and you got to make sure the employees are producing good products for the customers. So this is where now when you understand the system, you will realize that as an employee, you get your labor. And unless you get equity, you don't own the company, which is where now you need to own the company. In America, every single person needs to be a business owner. But that does not mean that everybody should be a business operator. That does not mean that everybody should start a business. And that does not mean that everybody should manage a business. In fact, most people should not. So how do you own the business without operating it, starting it, or managing it? By going out and investing in other businesses, by being a shareholder, by being the investor, by owning the equity in other assets, whether it's stocks, whether it's real estate, whether it's startups. You need to go out and invest in these assets that are working to produce more value. That way your income and your wealth isn't just reliant on your skill set, because your skill set is fleeting, but there's no limit to how many assets and how much you can make and how much wealth you can build from these assets. Now, once you start investing your money, the next thing that you need to understand is that your investments will not always go up. In fact, in our economic system, we see booms and busts. Pretty much every decade for the last century has seen some sort of recession or market crash. Why does that happen? Because people start investing their money into an asset class. This asset class becomes overvalued. It becomes overheated. And then eventually people realize, oh, this asset is worth way more than what it's actually worth, causing some people to sell. Then when it starts to sell, you see this asset class start to fall. As this asset class starts to fall, people start to panic and to sell even more, and then it gets oversold. That's what creates these booms and bust cycles. And then you have the media, which perpetuates the top and the bottom. The traditional media, who says that nothing bad can ever go wrong when things are going up, that the market is great and everything will continue to be like this, getting more people excited to put more money into the markets. And then when things are going wrong, the traditional media will tell you about how the world is ending and how you need to get out while you still can. A new report just came out which said that our GDP, our economy here in the United States, actually grew by 2% instead of the 1.3% that was originally reported, which means that our economy wasn't slowing down as fast as a lot of people thought, which has a lot of people wondering, is the recession canceled? Are we still going to see a recession? Are we still on pace to see an economic slowdown ahead? Is inflation really affecting us? Are the higher interest rates really affecting us? And this is where I want you to pay attention to a couple of different things. Number one is what's happening in the economy and what is the delayed effect of the higher interest rates? Because if you look at the economy right now, how did we get into the situation that we're in right now where we still have high inflation, where people are still struggling to pay for a lot of different things, yet the prices of things are still rising? Well, in 2020 and 2021, we saw the most amount of money printing ever. According to the NASDAQ, it was close to $13 trillion of new money that was created, that was injected into our economy, which is a lot of money. So you had all this money created and injected into our economy, which means now all of a sudden, people have the ability to spend. Businesses have the ability to spend. Businesses have the ability to hire more people. Businesses have the ability to expand operations. Businesses have the ability to open new offices. People have the ability to buy more stuff. People have the ability to finance more things. People have the ability to apply for more loans, which created a whole flood of new money entering our economy. Today, the Federal Reserve Bank is trying to cool down the inflation. Inflation is when you decrease the value of the dollar by printing more money. We had so much more money created that the value of our dollar dropped, which is why the prices of things have risen so quickly. Now the prices of things have risen so fast that the Federal Reserve Bank is trying to cool down this high inflation. They're trying to cool down the speed at which prices of things are rising. How are they doing that? By raising interest rates. But you have to remember, they're raising interest rates to combat all the money creation that happened in 2020 and 2021. And I don't think anybody really realizes the full impact of all that money printing, which means it's going to take time and effort and even economic pain to get this excess money out of our economic system. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you gotta do is click that button right over there. Thank you for watching, and as always, keep hustling.